I mean, I would say this is that, first of all, it's not Winters that would get the credit, it's Buffett, because he's the real market mover. But beyond that, it's really a red herring argument, because Buffett is not the traditional activist investor by any means. And activist investors are coming in like sheep in wolf's clothing, and there's a really alarming trend of it happening more and more and more. And it's really problematic because they have such a short-term view. And this is nothing that's new. This is something that we've seen, and they come in and they've destroyed a lot of companies as a result. So in this case, yes, maybe it's a good situation. But overall, if you look at the history of this type of investment, it's really dangerous and it's really short-sighted, and that's not the way a business is run.
But Phil, would you say it's fair to say then that the run-of-the-mill shareholders just didn't do their homework for a company whose executive compensation plan just went up with every single year and diluted existing shareholders, and the sales in their core category were going down at the same time?
Including Warren Buffett, who didn't know about this until after David Winters said something.
Yeah, again, I think this actually, in this situation, wouldn't be something where I'd say it's a bad thing. Investing activists on occasion can have some really good outcomes. But if you look at the overall trend, it's not positive. So on this one, I would side with Buffett. But
John Taffer, are all activists created equal?
No, and when you're diluting shareholders by 16%, as Winters claims, that's a big number. And that has a huge impact. And programs like that should be exposed. But there is a short-term, long-term issue here. Compensation plans like this are more strategic in their thought and development. They're designed to enhance share value over a longer period of time, and a short-term activist view can impact the long-term performance. So this has to be dealt with very carefully.
Yeah, I agree with John, and I would say that activists are a net positive. I would disagree with the concept that overall activism is bad. If you look at the makeup of who owns all of the other stocks, the individual investor will never have the clout, so you have to rely on institutions. Mutual funds barely ever vote in proxies to the extent that they would go against the board. Most other asset management firms aren't going to do that either.
I don't think you can lump in these activists together. I think that there are ones that have a more long-term view. Certainly addressing executive compensation is more long-term than something like a share buyback. And so I think you have to look at them on a case-by-case basis and say, are they really an activist, or are they just playing one on television?
I mean, and while the individual investor doesn't have the clout, they also are now listening to voices that they may not be hearing. The institutions they may not trust. The active investors they may want to hear from.
Yeah, see, the activist investors, though, the problem with the activist investors is that overall, they're not looking at this thing from, I want to be representing the shareholders' best interest. They're looking at, they need to represent their capital's best interest. And their capital's best interest typically is more short-sighted and quarterly based. And you don't run a company quarter by quarter.
Would you say that about Nelson Peltz? Probably
it depends
not.
on the investments. It depends on the investments.
If you look at somebody like Warren Buffett as a passive type of activist, I mean, he was the one that had the muscle here. I actually have a theory that he had two guys named Big Vito and Little Vito who paid a visit to the CEO of Coke and said, I'll make you an offer you can't refuse. And that's really why we're getting the momentum.